What's up, guys? Here I am with the bull's ass of Wall Street because I have to tune in, give my take on this GameStop thing that's going on, right? I'll teach you a bit about what a short sell is. I'll kind of explain what's going on with the scenario there, why it's a little bit political and controversial, and the brilliance of the people who essentially forced the hand of hedge fund managers on Wall Street to pay out billions of dollars to all the small guys, right? So, people like myself and many others around the world are considered to be retail investors, right? They're usually individuals out doing their thing. A lot of times they're day traders or they're trying to capitalize on just the charts, the ups and downs, the swings of a stock. They're trying to buy low, sell high. They're not considered what you would say a value investor, such as like Warren Buffett, where he's trying to literally analyze the numbers of a company and say, is this going to be a viable company for many years to come? And then, sort of purchase it and hold it for a long time. There's also the hedge fund managers that right now they're really starting to go short because if you've watched some of my other videos, go ahead and watch the ones about, the impending stock market crash, how to survive a crash, those kinds of things. There's a lot of things that indicate we are due for a massive recession. Even if it's not massive, we got to be on the verge of a real recession coming. And so people are taking a position where they're betting against the market. And that's what you would call a short sell. So let me just explain the short sell real quick, because that's a really critical piece of why this GameStop thing has caught so much wind. Okay, so a short sell, like I said, you're betting against the market. So you have a long and you have a short, right? If I'm going long on a stock, it means I'm like Warren Buffett. I bought the stock. I'm trying to hold it, betting it will increase in its value and the stock price will go up. And at some point in the future, I can sell it for more money than I bought it for. If I'm short, I'm basically selling shares that I don't own, and then I will buy them back at some point in the future and I'll keep the difference. Okay, so how that works is basically the broker will make shares available to short. And so in a sense, I'm borrowing shares from the broker. I'm going to sell those shares. So I just cashed in, right? I took my money. It's sold shares I don't own. And now I have to buy them back at some point in the future. So you're doing it exactly the opposite of your typical trade. So instead of like buying low and selling high, you're going to sell high and then buy back low, right? So I sold my shares. That gives me a debt. This is critical, right? So if I sold my shares, I took the money, but I have a debt, right? I owe the broker a certain amount of shares back. So from my own personal account, I've got a change in my assets versus cash value, right? And so I have to in order to fulfill my obligation to my broker, I have to buy back shares so that they can have those shares back and my funds are settled. What happens is when I do that, I have to keep my debt to asset ratio within a certain range, or my broker will call for asset changes, right? So that means I either have to sell other assets I own and deposit more cash into my account, or I have to buy back those shares at the current price if it comes to that, right? So if the price is, let's say, $100 and I short it, I sell a bunch of shares and the price doesn't change much. It might go up a little, right? Which is bad for me. And then I have to wait it out and it eventually comes back down. The broker's never going to force me to execute that as long as it stays in a reasonable range. But if that price skyrockets up, I'm suddenly really out of whack when it comes to that ratio of my debt to assets, right? So the broker might say, you got to fix this, either deposit cash or sell buy the shares, right? And settle some funds. So what happened in this GameStop gig is some of the hedge funds in Wall Street had shorted GameStop. Now, they were on the right track there, right? GameStop has been declining for a couple years. When you think about its business model in the current climate with COVID and things like that, it's just not a very good business. Like um, people compare it to like Blockbuster when Netflix came along. I mean, it's just like a lot of games are downloaded and they're selling physical grant games, and there's like trading of games and stuff. So the profit margins are not huge. They're a physical store that's in malls, so they have rent and all this stuff, right? And of course, in COVID, malls are not exactly what they used to be. So there's a lot of reasons why GameStop is not a very solid company. So they shorted it, but they got crazy about it. To my understanding, they shorted it like 149% of what shares were available, which is insane. Now, I don't know if that is completely accurate, but as of today, January 30th, it is currently short 121.91%. So it's still insanely overshorted. And so what happened is a bunch of guys out in the world saw that happen. Wow, this is insanely short. If we push the price up, we'll squeeze them. Now that's what we call a short squeeze, is when you literally drive the price up and people are forced to execute their shares. And when you force those people that are short to purchase, they become buyers, which push the price up even higher than it was before, right? So this group of people through Reddit and a community of stock investors essentially said, let's buy GameStop. And they started buying these shares, and they drove the price up well over 1,000%. To my understanding, it was something like 1,500%. So it went from, like $20 a share up into the 300s. So actually it's like $330 today or on Friday, something close to there. So it went up many times its value and forced people to buy their shares back at ridiculous prices. And this literally resulted in the transfer of several $billion from hedge funds to these retail investors. And that's why I'm sitting by the bull's ass of Wall Street. It's like the small guys beat the big guys this time. And so now a bit of why it's controversial and like political. A lot of these investors were actually using Robinhood, which has been sort of laid out as the little guys app, stock investing app. They were one of the first to come out with free trades, and we support the small guy. We're not built on Wall Street. Well, it turns out there may be some things behind the scenes with Robinhood where they are providing information to these hedge fund managers, but also the real thing that is definite and has caused some real frustration and anger in the market is Robinhood eventually stopped allowing people to buy GameStop on their app. You could only sell GameStop stock on their app, which of course protects the billionaire hedge fund managers, right? They're going to protect the hedge fund, not the little guy. So that is market manipulation. That is, inhibiting fair trade and equal trade and all these things on the stock market. So, while the hedge funders might be saying this is ridiculous, you're driving the price of a stock up that is literally worthless, that's their choice. They get to buy those stocks at whatever price they want. It was also the hedge fund manager's choice to go 149% short on a stock. And this is all public information. So, they took a big chance. Both sides were taking a chance. And, a lot of times you'll hear people talk about, if you're going to invest in the stock market, you got to realize you're playing poker with pros. And in this case, the pros got their bull's ass kicked, right? So this thing it's brilliant in a lot of ways. It's controversial in a lot of ways. And at very least, it's entertaining as hell. So I had to give my 2 cents here. So anyway, I hope you found some value in the lesson here, and now you can understand what exactly is going on with some of these stocks that are being that are heavily shorted by these hedge funds, and now they're coming up against some tough competition with a bunch of these retail investors. So if you found any value in this video, please hit the like button, hit the subscribe button, share this with your communities, and I guess we'll catch you on the next one.